Hello, folks, and welcome to the CRYPTX Live Wire. Today is Monday, December 1st. And I want to talk about first what I think is driving this market really as a whole, and that has to do with liquidity. So obviously last week was a little bit rough following NVIDIA earnings, but ever since prices really climbed back. And that has been a result of the Fed rate probability of a 25 basis point cut on December 10th really going much higher. So if we look at, for instance, let me share my screen. So if we look at the chances of a Fed rate cut December 10th, you can see we were struggling earlier in terms of the S&P 500 when a lot of people thought that there would be no change to the rate cut. But ever since, we've rallied to this point where the 25 basis point decrease actually has a basically 90% probability of happening. So is it a coincidence that that probability went up in the last week with the market rallying? Maybe it's coincidence. I mean, I think not. Liquidity continues to be the full story in what we've seen. And, ever since that, the market's kind of responded accordingly. We see dollar down in the last couple of days. They're really sensitive to liquidity aspects, have to do with, silver as well as gold. I mean, those have really been on highs. And you've seen this reflected in the currency markets as well. Interestingly, though, Bitcoin is underperformed and it just continues to trade very poorly. And, I know a lot of folks think Bitcoin, and even I'm a believer that it will go to 1 million one day, but in order for it to go to 1 million, it has to start to outperform first. And as of now, it is one of the weakest risk assets that we've seen. S&Ps are almost at new highs at this point. So we'll see. I think all of this, liquidity driving the market really makes December 10th, the decision of the rate cut, an important day. It's going to be interesting to see how the market responds to that 25 basis point rate cut if we get it. Some things I'll be looking at, for instance, are going to be the dollar, because the dollar has come off a lot since then, or since the probability of rate cuts have increased. So I always like to look at potential news failures, like, for instance, if the rate cut occurs, that should be, in theory, bearish for the dollar. But let's say maybe it gaps down to start the day and then rallies into the close. That would be a news failure and something that I might be interested in longing. But we're going to have to watch. We're going to have to see ultimately how things shake out. Interestingly, though, the yen has been the strongest of the other currencies, kind of faded off into the close today, but had a strong start to the day. When we look at the 10-year for Bank of Japan government bonds, this continues to go up a lot, right? This has been a very strong day for the 10-year in terms of the Bank of Japan. So the higher this goes, in theory, it should be bullish yen. The critical word is in theory. But we'll see, right? We'll see. This is, just kind of how the week has started. I'm kind of just reporting the news. So the next thing I want to talk about has to do with the midterm election years, specifically as we approach 2026, which is a midterm year as well. So what this table is showing you guys, and what I have here, are 25 instances of midterm election year performance going all the way back to 1926. So 100 years of midterm election years. What we have seen is that the average drawdown in the midterm election year, going back 100 years, is negative 18.2%. So does this have to happen again in 2026? Absolutely not. But if we are judging this just purely based on historical averages, we should expect at some point in 2026 to see an 18.2% correction, roughly speaking, right? Roughly speaking, somewhere in that ballpark, generally speaking. So even though things look a little bit more bearish, at least from a historical context in 2026, I think one of the more optimistic statistics here from this table is that 1 year after the midterm election year, so the post midterm year, we see a return on average of 14.8%, which is really good. That's a lot better than the average of 9 to 10% annual return that the S&P usually produces. So going by history, I will reiterate it again, if we're going to project this midterm election year data onto 2026 and 2027, then we should expect some type of correction of 18% in 2026. In other words, some type of bear market. However, the fortunate thing is 2027, will probably be a good year based on historical analysis, from the midterm election year. So I think that's something that is cool because it's aligned with our previous thesis regarding the midterm election year in 2026 and the expectations that we have formed around it. So just thought that was something interesting and worth sharing, but not looking to take a huge amount of risk into 2026 because I want to save those bullets ultimately for 2027. I think it will be a little bit more of a favorable year, but hope you guys enjoyed. Actually, we have one more comments. All right. That's all. Appreciate you guys tuning in today. Make sure you check out the 2-week trial at stickytrades.com/CRYPTX. Link in the description below. And we will see you guys next time. Thank you.